Hello and welcome. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is Monday, the 16th of November. Markets are moving, so let's get right to the reasons why. So right out of the gate, we have our first topic of the day, Dow 30,000. We are just under that as I film this broadcast today, this Monday. And so markets were up big overnight because we had a vaccine development. So, and once again, right? So last week I announced another big pharma company, biopharmaceutical company, that announced a 90% effective rate. And now this one is a 94, 95% efficacy in terms of the vaccine itself. That is sending this, the market in terms of the reopen trade. And all the calculus was based upon not reopening for any time soon, not having a vaccine. Sort of the gloom and doom, setting expectations to live under the, COVID-free environment was sort of a hope and a dream. Well, in just a few short weeks post the election, very interesting in terms of timing, but that being said, a few short weeks post the election, we've got not only one vaccine, but two vaccines. And this one's better than the one last week. So there's a lot of hope, not only here, but around the world, because this is a serious issue and it needs to be addressed. And you're going to watch the conversation shift from not only the vaccine itself, but now how are we going to deploy this and who's going to get it? And long story short, as I said before, early on, and when we first started this back in March, there are so many shots on goals and there are so many opportunities. This is essentially the world against one particular COVID-19. I wouldn't bet against our science, our technology. I wouldn't bet against our medical community to come up with a solution. Well, fast forward, we're not even out of 2020 yet, and we have positive development. That's moving the market because, again, the markets were set up on not reopening anytime soon. So expectations set and corporate guidance are now going to be adjusted up accordingly. And that's positive. We're seeing the stay-at-home trade lose momentum, lose steam. That means that money's rotating out of those. And those sectors that need some help, so very much so, are the travel sectors. Think about the leisure sectors or the restaurants. And what we do know is we're getting closer to Congress once they're in session in January. And we have them get back to work and add a coronavirus 2.0 sort of CARES Act assistance specifically to those sort of states, municipalities, and small businesses that need them oh so much, as well as unemployment insurance, because there's a big subsector of the economy that still needs the help. But that being said, it's my final topic I'll turn to right now, which is, let's go to the board here. Why is the Dow up almost 30,000 in terms of an all-time historical high today, but reaching the 30,000 level? How and why? So many clients have been asking this question almost in disbelief. The reality is that obviously I said before, mom and dad SNL, which is the Federal Reserve, has been fully committed and supported in providing liquidity and everything that the market needs, which is key and critical. Don't ever bet against the Fed. That's the number one rule in the investment management world, as well as a combined effort, coordinated effort, if you will, with Congress. And so now we're getting closer to Congress getting their act together once they figure out sort of how the dust settles post-election. But there will be a CARES 2.0 act. We don't know if it's large or small. In between, we do know that the Fed will pick up the slack either which way. That's the backstory. Now let's take a look at the earnings. For the first time, we have guidance being reported by corporate America that is double the 5-year average in terms of corporate guidance and positive corporate guidance going forward. What do I mean? Well, specifically, the 5-year average for guidance or corporate earnings guidance, so companies coming out and sort of the business leaders and the C-level executives would project some guidance in their conference calls on the next quarter to come. Only about 32% or 1/3 of the S&P 500 would ever project guidance if they would. Now, historically speaking, we're not only getting, the 32% is the 5-year average. Right now, we are getting a 68% reporting on future guidance from all of these corporations. And better yet, they're guiding up. So they're projecting better than average corporate earnings in the fourth quarter of 2020. That's incredible. It's outstanding. The 5-year average, again, is 32% for them even to report, like only a third report as to sort of giving you a picture preview going forward. Is it going to be bad? Is it going to be good? Or is it just going to be the same and grind their way through the sort of the economy at the time? You have over 68% of those companies in the S&P reporting guidance above average going forward for the fourth quarter that we're in right now. It's astounding. So set with the Fed as well as Congress support, you get corporate America learning to live with the virus, but more importantly, learning to thrive. This number is really indicative of corporations being able to thrive through this environment. Now, you go, markets look through, right? They're looking through the post-COVID market or even economy, if you will. We will be well above Dow 30,000. I can't tell you when, but markets are set for a good long trajectory going forward as to this positive outlook, and earnings drive markets. So that's the key critical component underneath. And we're getting above average guidance, which is positive, double what the 5-year average is in terms of a go forward basis from corporate America. So that's your how and your why as to, gosh, how could markets hit all-time highs in this environment that we're in right now? So I hope I explained a little bit to you. I gave you a picture preview of what markets are seeing. They're looking beyond 2020. They're looking beyond 2021, even 2022, if you will, in terms of corporate earnings. And that guidance from corporations, as I just reported, is actually solid and improving going forward. So great news on the vaccine side. That means that hopefully at some point in time, we'll be able to get out and about and see ourselves, face to face sooner than later. As I said to my kids at home, we're closer to getting a solution and getting closer to the end of this than we are when we first started about nine and a half months ago, if you will, when we all of us have been subject to this. So everyone stay healthy and safe. That's my update for today. Thanks for watching. Like and subscribe, and take care and have a great Monday.